Okay, so in this video, you'll learn all about the Bollinger Bands trading indicator, right? Specifically, you'll learn what this indicator is about and how does it work. And the biggest mistake, right, that I see traders make with this indicator, right, and how you can avoid it. Then we'll dive into three practical trading techniques, right? Like, how to identify explosive moves in the market before it occurs using Bollinger Bands, how to use Bollinger Bands to better time your entries, and how to use Bollinger Bands to ride massive trends in the market. So there's a lot to cover, right? And I want to dive straight in. So first and foremost, what are Bollinger Bands? So to understand this indicator first, you must know that it has three components to it, right? So I want to explain to you, right? The first component is basically the middle band. This is a very simple 20 period moving average, right? It's represented by the middle band. And then the lower band and the upper band are simply two standard deviation away from the mean, all right, or rather away from the middle band, right? They're just two standard deviation away from it. So some of you might be wondering, what is standard deviation, right? So it's basically, right, to determine, right, how overstretched the market is. So when you say that something is a 3 standard deviation away from the mean, it's telling you that it's pretty done overstretched, right? Because it's 3 standard deviation away. So the higher the standard deviation, right, the more overstretched the so-called market is, right? But one thing to understand, right, is that just because the market is overstretched or it's at a far standard deviation away, it does not mean that the market will immediately reverse. So that is something to bear in mind and take note of, right? But I just want to break it down to you, the concept of standard deviation, right? But basically it's to illustrate to you or to tell you, how overstretched, right, the market or price is by using this concept. So a big mistake, right, that traders make, right, when they are trading with Bollinger Bands is taking the standard deviation for granted, because they see the market, it's at this outer Bollinger Band, it's 2 standard deviation away from the mean, I should go short. And if you go short, right, you can see that it's going to be very painful as the market continue to grind higher. So first and foremost, right, a big mistake that traders make is taking it for granted that just because the price is at the outer Bollinger Band, they will blindly go short, or just because the price is hugging the outer Bollinger Band, it means that it's a good time to go short, right? Especially when the market is in an uptrend. So one thing to bear in mind is that always pay attention to the trend, right? You want to be trading along with the trend. Okay, doesn't matter what an indicator say, doesn't matter it's overbought or oversold or very overstretched and blah blah blah, right? Pay attention to what is the trend, right? And from then on, if you trade along with the same direction of the trend, right, you would tend to make better trading setups and trading opportunities. Okay, so this is a big mistake, right? Don't just blindly short because the price is at the outer band. So moving on, right, I want to share with you 3 techniques that you can use, right, when trading with Bollinger Bands. The first one is what I call the Bollinger Band squeeze. So what this means, right, is that when you notice your Bollinger Bands, right, getting tighter and tighter, like for example, you look at this outer band, right, it's getting tighter and tighter, looking like a very squeezed up sausage, right? It's telling you that the volatility of the market, right, is shrinking, right? And what happened is that if the volatility of the market is shrinking, right, there's a good chance that volatility will expand sometime in the future. So you can see that volatility has shrank, and then what happened is that boom, right, massive breakdown over here on crude oil. So the Bollinger Bands could give you a signal, right, telling you that this market, right, could possibly have a breakout move, right? So this Bollinger Band squeeze, right, gives you a heads up, right? Like, hey, warning, right? This market could possibly break out sometime in the future. So, this is a warning for you. So this is how you can actually, go about finding explosive moves in the market by paying attention to the Bollinger Bands, right? Pay attention to the squeeze, right? Because when the market breaks out, when volatility expands, right, you look at the bands, it looks like a balloon right now, right? At this period, right, is where the breakout has already occurred. But prior to it, right, you notice, right, this sausage looking thing, right, the bands are somewhat, horizontal, right, not yet, like a inflated balloon. It's still like, very tight sausage. Okay, so this is one tip, the first tip that I want to share with you. Second thing, right, how do you actually better time your entries, right, when trading with Bollinger Bands? This is useful, right, especially when the market is trending, because, when the market is trending, right, often, say, for example, market is in a range, breaks out, then a lot of times traders will look for, a previous resistance turn support, hoping the market will come down lower, get long, and then, trade the long side. But more often than not, the market doesn't, give you this retest so beautifully. So what can you do, right, to, still time your entry on the pullback, right? Especially if the pullback doesn't, retrace deep enough into this previous resistance turn support. So what you can do is you can use the Bollinger Band. Okay, in this case, you can see that if you recall, this over here is the 20 period moving average. And you see that the Bollinger Band, right, or when the market is trending, it tends to, retest back this 20 period moving average, right, before continuing lower, retest, then continue lower. So to a trader, right, this 20 period moving average could present to you trading opportunities, right, a potential area where the pullback could end, right, and then, continue to trade in the direction of the trend. So when the market retraces back towards the 20 period moving average, right, that could be a potential area of value, a potential area that might want to, initiate a trading trigger, all right, an entry trigger for you for your trade. So this 20 period moving average is a area of value that you can pay attention to better time your entry. Here's another example, right? So you can see over here, right, market break above this area of resistance, came back, retest the 20 period moving average, right, continue higher, almost retesting it, then continue trading higher, right? So you can see that again, the 20 period moving average, right, is an area of value, a potential level where, area where you can actually, time the entry to trade with the trend. And one last tip is to share with you is how to use Bollinger Bands, right, to ride big trends. So again, right, using the same concept of the 20 period moving average, you can trail your stop loss, right? That means you will remain in the trade, right, until the market break and close above the 20 period moving average, and then you exit your trade. Okay, or alternatively, if you are more, you're more, you want to give your trade more room to breathe, what you can do is that you can also trail it, right, using on the outer Bollinger Band, right? So in this case, right, if you use the outer Bollinger Band, right, you would only exit when the market break and close above this outer Bollinger Band over here. So this give your trade more room to breathe, right, and increase the odds of you capturing a longer term trend. So this is also another way on how you can actually use, right, Bollinger Bands to ride the trends. So just a quick recap to what you've learned today, right? Bollinger Bands, right? So be aware of trading against the trend, right? Don't blindly, short the outer band, right? Just because the market is overextended, right? Because if you are trading against the trend, the market can hug the Bollinger Bands, right, for quite a long period of time, as you've seen earlier. Second thing, right? A Bollinger Band squeeze is likely to be followed by a breakout. So if you see the Bollinger Band looking like a sausage, a very tight sausage, right, there's a good chance that it could break out sometime in the future. You can time your entries when trading with the Bollinger Band. Pay attention to the middle band, which is the 20 period moving average, right? That is where the market could possibly retrace to. And finally, right, you can ride big trends in the market, right, by trailing your stop loss using the middle band or the outer Bollinger Band. Okay, so if you want to learn more about my trading approach, methodology, and strategy, you can go down to my website, tradingwithreina.com, right? Scroll down, right, and download this trading guide, right? The ultimate guide to price action trading, right? Where you learn how to read the price action of the market, better time your entries and exits, and also, right, get the ultimate guide to trend following, right? Where you learn how to, ride massive trends in the market using different trading techniques. These two guides are completely free, right? So just go down to my website, tradingwithreina.com, click this blue button, enter your email, and I'll send this guide to your inbox for free. Alright, so with that said, right, I have come to the end of this video. If you have any questions, feedback, let me know in the comment section below. And if you've enjoyed this video, please hit the like button, the subscribe button, so you'll always stay up to date. So with that said, I wish you good luck and good trading. I'll talk to you soon.